There's this invisible force that drives every single financial market. It's not about the technology, it's not really about the news, and it's not just the charts. No, it's something way more fundamental, something deeply human. And it's the invisible engine behind almost every massive move the market makes. Just think for a second about every major market crash you've ever witnessed or read about. Those moments of just sheer panic, where it really feels like the floor has completely dropped out from under everyone. And then you've got the flip side. Every one of those explosive, out-of-nowhere rallies. Those times of total euphoria, where it seems like prices can only go up. And suddenly, everyone feels like a genius. So what is it? What connects these absolutely wild swings? What's the one thing that's always there, behind both the chaos and the celebration? Well, it turns out it all boils down to two of the most primal, powerful emotions we have: fear and greed. These two forces are in this constant tug-of-war for control over the market's mind. And today, we're going to pull back the curtain on the one tool that was designed specifically to measure that struggle. So, how in the world do you measure something like fear or greed? Well, that brings us right to the heart of what we're talking about today. At its core, the Fear and Greed Index is basically a sentiment gauge. Its job isn't to predict what the price of Bitcoin is going to be tomorrow. Not at all. Instead, it's just trying to take the market's temperature by answering one really simple question. Right now, are investors feeling more fearful, or are they feeling more greedy? Think of it like a snapshot of the collective mood. And it gives us this mood as a number, a score from 0 to 100. A score from 0 to 24, that's extreme fear. That's a sign of widespread panic. From 25 to 49, you're in fear. 50, well, that's perfectly neutral. Then, from 51 to 74, you can see greed is starting to creep in. And finally, anything from 75 to 100, that's extreme greed. And that's usually when euphoria has taken over the driver's seat. But where does that number come from? Is it just a guess? Absolutely not. The index is actually what we call a composite. It blends together several key pieces of data to paint a really holistic picture of how the market is feeling. So to get its score, the index looks at a few key signals. For instance, it measures market volatility. Why? Well, because huge, sharp price drops and wild swings often mean there's a lot of fear out there. It also looks at trading volume. A massive, sudden explosion in buying can be a sign of greedy, FOMO-driven behavior. It combines all that with what people are saying on social media, Bitcoin's dominance over the market, and even what people are searching for in Google to get a sense of whether the market is feeling nervous and defensive or confident and aggressive. Now, this is where the index stops being just a number and starts becoming more like a historical lens. Because when you look back, you can see a really clear pattern between these emotional states and major turning points in the market. Let's just look at the history. The 2017 market peak, the index was screaming extreme greed. The big crash in March of 2020, yeah, it dove deep into extreme fear. And the 2021 bull run peak, you guessed it, extreme greed all over again. Now, history doesn't repeat itself perfectly, but as they say, it sure does rhyme. And these emotional extremes have, time and time again, shown up right around major market tops and bottoms. So we have all this historical data. It seems pretty straightforward, right? But knowing how to actually apply this information correctly, well, that's what really separates the pros from the amateurs. And this brings us to what is, without a doubt, the most important rule of all. The Fear and Greed Index is not a traffic light telling you when to buy or sell. Professionals use it for context. A reading of extreme greed doesn't automatically mean sell everything now. It's more of a warning sign that the market is getting overheated and that risk is high. In the same way, extreme fear isn't a guaranteed buy now signal. It's just an alert that some assets might be undervalued and that an opportunity could be on the horizon. It's one piece of the puzzle, not the whole picture. And because the idea is so simple, it's actually incredibly easy to misuse. So let's just walk through the most common and, frankly, most costly mistake that beginners make with this tool. So the flawed thinking usually goes something like this. Step 1, an investor sees the index hit extreme fear. Step 2, they immediately jump in and buy, thinking they've just perfectly timed the exact bottom. This is, to put it mildly, a recipe for disaster. Why? Because extreme fear doesn't mean the selling is over. A market can stay in a state of extreme fear for weeks, sometimes even months, as prices just keep grinding lower. It signals a condition, not a reversal. And that leads us to this really essential takeaway. Just reacting to the market's emotion is, well, just another form of emotional trading. A real strategy combines this sentiment data with other tools, things like understanding the overall market structure, finding key support and resistance levels, and above everything else, practicing solid risk management. So at this point, you might be wondering, okay, but why is this index so popular in the crypto world specifically? And the answer to that really lies in the unique DNA of the cryptocurrency market itself. I mean, think about it. Unlike the stock market, which closes at night and on weekends, crypto trades 24/7. There are no circuit breakers, no central authorities to hit pause when things get crazy, and maybe most importantly, there's a huge amount of participation from everyday retail investors who can be a bit more susceptible to making emotional decisions. All of these things together just amplify both fear and greed, making sentiment an incredibly powerful force. So as we wrap things up here, let this be the one idea that really sticks with you. The real value of the Fear and Greed Index isn't in telling you what to do. Its true power is in telling you how the crowd is feeling. And as history has shown us, at the absolute extremes of a market cycle, the crowd is very often wrong. So the next time you see a massive price swing in the market, up or down, you can use this as a tool to ask yourself the right question. The question a professional trader would ask. Is this move being driven by sound logic and fundamentals, or is it being driven by pure, raw emotion? And honestly, just being able to answer that question